Welcome to a very special edition. It's an Only Dan's edition of the Risk Reversal podcast. Dan Ives here with me, Global Head of Technology Research at Wedbush. Dan, welcome back.
Great to be here.
You and I had one of my most enjoyable conversations that I've had in a very long time. It was on April 11th. You were in here sitting in that same seat. And we were in the throes of
that was a dark day.
Yeah. So let's just talk about that. We're gonna talk about tariffs. We're gonna talk about its impact on major tech. We're gonna talk about some of these names in particular. We'll probably still focus on the largest ones and kind of the post-earnings sort of take here, and then maybe we'll get into some of this commentary we've heard from about AI. It's gonna kill all of us, or maybe it won't. I don't know. So we'll talk a little bit about that.
Great.
And some of the names that you think are interesting outside of the hyperscalers and NVIDIA and that sort of thing. All right, let's go back to April 11th. You and I are here. Things felt bad. You know, the markets, the broad markets were careening, but it wasn't just about stocks. It was the dollar was getting hit. Yields were going higher, right? There was a lot of things going hit. Gold was making new highs. These stocks were careening lower. Where are we a month out right now? In your own head, like, how are you feeling about things right now?
I mean, I'm feeling, look, that was like, I got to tell you, and I think I told you, like in 25 years in this business, that period, that like week or two, it's probably some of the most negative I've ever felt, including financial crisis. Because in tech, because of the supply chain, because of tariffs, and ultimately what that was going to do, look, we are in a dramatically different situation. And the reason we are today, it's not just after getting through earnings season. It's, you know, if you look, it's the 90-day pause in terms of everything we saw there. It's the realization that administration is going to have to continue to back off when it comes to China tariffs. 145%, we think ultimately ends up being a 20-25%. And I think the biggest thing is like all the survey data. I mean, like, look, we live on survey, field check survey data. The spending trends have held up in the enterprise, hyperscale, IT, shockingly.
And you're just basing that off not just the earnings and the guidance we just got, just the survey data.
The hundreds of enterprises we talked to.
Right, so just explain that process, you know, for some who have not been in this infrastructure, whether it be sell side, buy side. What does that mean? Because a lot of folks who watch CNBC and you know, they're looking at their screens wherever they're doing that, they're looking at the headlines that are coming from the companies, you know, what analysts like and strategists are saying, that sort of thing. Tell us what the survey data is.
Let's be quick. My value, it's not on earnings the day before, the day after. It's really not just during the quarter, but it's really hand-holding and to understand, like, my team spends most of our time talking to CIOs, partners, trying to understand like sales, vendors, private, public, to basically understand like what's happened.
So is that a qualitative process, or you take that data and then you kind of put it into some sort of model, the way you kind of think about whether it be the sector or subsector or the
it's basically if we're tracking X amount of deals, how many have slowed down, how many have accelerated? Are we seeing massive discounting or no discounting? Which vendors look better, and that speaks to, like, if you go back like years ago, it's like the Palantir and some other, or I'm just saying like a lot of our best calls over the decades or whatever, it's that data. It's trying to understand like who is like when me and you've talked about like in late 22, like the AI trend with the NVIDIA or the hyperscalers. So before earnings, I think it was like a week before, we're like, look, because when we got this, we don't know, like when I'm talking to customers, like if it's super negative, that's where it is.
Yeah.
If it's,
do you get influenced at all by some of your customers, some of the investors that you speak to?
I mean, I think you definitely get, it definitely could influence you, but I think you have to try to look at unemotionally.
Yeah.
And also the thing is too, like when you're like a glass half full person like me, sometimes you have to also make sure that doesn't influence you, because it's very easy to be like, 7 of 10 deals got pushed, but it's no big deal. So I think that's the other thing is like you have to be able to separate and look, going into earnings, we talked about that week before, we're like, look, I can't believe I'm saying this, but I feel going into earnings season good relative to everything we're seeing from a spending. So everything was talking from like hyperscalers, CapEx, got that was one where it's like, even though if you look at names, okay, Microsoft's had a bigger outperformance, but it's almost like my biggest fear when we sat here on the 11th of April was like that like Armageddon scenario, like the one, like the real
well,
bad
you said
one.
it at the time. You said, listen, I've been an optimist about tech, for as long as you've been doing it.
Yeah.
And, obviously there's going to be, peaks and valleys as far as sentiment, as the way the stocks move, the way spending is, all that sort of stuff, cycles and everything like that. And so that underlying, kind of feeling that you've had about the industry that you cover, you've said it, sometimes it can cloud my view. You just said that. But this was a period, let's just kind of break this down for 1 second, because I don't think either one of us thought with an S&P at 4,900 that was just at 6,150 that we were going straight to 4,000. Okay, like the VIX was at 40, gold was above 3,000, the 10-year yield was at 4.55 or something like that. The dollar index was below 100. I mean, things were literally going haywire, right? So you could. There's a way in which you could have said, I don't feel comfortable about things, and it was broader than the markets, but you did say, I think, into the prints that these companies are likely to be okay.
Yep.
So what did you hear from the guidance? Like, let's take the macro out of it right now, because you and I, we don't know what's going to happen. You know what I mean? I don't think that the worst case scenario on the tariffs might be out of the way. I don't think the worst case scenarios for the stock market are. Okay, like that's my 2 cents. Now you were just saying,
and I've heard you talk about
all right,
that,
so let's talk about what you took away from earnings. Let's focus on Apple, Microsoft, Amazon, Google, and Meta. NVIDIA hasn't reported yet. I don't think you and I want to put Tesla in the other category. We'll talk about that later. What did the hyperscalers say to you about what they reported and what their outlook was, and obviously the CapEx?
The main thing to me is really about use cases, because I know, like we've talked about it before, it's like if the use cases actually are starting to play out in the enterprise, and you could we could argue Palantir, like, is it super expensive, is it ridiculous? But what I'm saying is, to me, it's really about the spending trends. Everything we saw from hyperscalers to the software players, ServiceNow, Palantir, I kind of view there's a group of, let's call it 5 to 7 names I've used like the best barometers, where it's basically like, look, companies, no one's getting off the line. The spend, it's greenlit. I think it was like everything we're seeing from budgets, it's greenlighted. Because the main thing that we're seeing, and you heard about in earnings, is that a lot of these enterprise budgets, you get past a certain point where it's either like yes or no. And once it's yes, it's really a full go. And I think on the AI side, if you look, of course, you look at CapEx or big tech, but if you look on hyperscale, you look at some of the Azure numbers and the AWS numbers and the GCP numbers, that foots with all of our survey data. It shows to me like software is a safety blanket trade in this market. I mean, that to me.
Were you impressed though by so let's talk about Microsoft, and let's talk about AI and what they were able to bundle into. Like, it wasn't that impressive, right? I mean,
see, I view it. It's also relative to expectation, because I view like the Azure acceleration, not just the beat, but the fact like guiding for an acceleration. The fear, if you go back, and it's a big reason Microsoft has kind of been a nothing stock for it's like, is it just going to continue to decelerate? Like, are you actually going to start to actually see an acceleration? And I think what we saw in terms of, AI-driven revenue, and ultimately what we saw in terms of Azure growth and intelligent cloud, which to me, those are really the barometers for Microsoft. That was kind of like check, check. Now, does that mean, is that enough to get the stock to 500? No. Is it enough to now actually like stave off that kind of worst case scenario and start to build back like a sort of new narrative? Yes. So that was my view with Microsoft. It wasn't going in and being like, it's a watershed.
Were you surprised the stock gapped up the way it did and held the gap?
The reason I wasn't surprised that the sentiment institutionally going
so bad.
How about this? From when I left here to going into that print, it was like a Michael Jackson Thriller video. It was that negative, like in terms of on Microsoft, especially institutionally. I also think institutional, everyone was positioned either negative, short. It was a pretty.
So here's about Microsoft. I mean, I know you took a really deep dive into this quarter. I know that you talked to probably dozens of your clients. Some were on probably both sides of this thing, right? And the ones who were negative on the way in probably didn't change their mind that much.
I'd say maybe like 25% of them.
Yeah.
It changed, but I think
So I look at the stock at where it is right now at 440 was exactly where it was when they reported their calendar Q4 3 months ago, and there it gapped down 8%. You know what I mean? And then kept on going. And so when I go back to that period from 3 months ago, Amazon sold off from those levels. Google, so these were highs, right? Yeah. And so I don't think one quarter changes a whole heck of a lot.
I agree with you.
Yeah, and I actually think though, for instance, if they don't re-accelerate Azure, if they don't see like an uptake of co-pilots and all the other crap there, I think the stock's going to fill in that whole gap, and it's going to be on its way back to $350 or something like that.
To your point, that's why these next 2 quarters, like if we sit here 6 months from now, it's either at 500 or 380.
Yeah,
it's like that's why it's very important. Now I believe we're going to have a few quarters now where you actually see what we've been hoping for the last 12 months. The acceleration, what we're seeing on some of the hyperscale, the co-pilot activity, because I think there's been worries about OpenAI and others, and they're not the only game in town. So I get your point. I just think we've taken a step in that right direction.
And it better be there better be other steps in the right direction, right? Mm-hmm. So one thing, Gene Munster was on the pod earlier this week, and he said that Deepwater, his firm, had a little summit, an AI summit, and they had folks from Anthropic and Perplexity, maybe a couple others. And one of the things he said that surprised him on the use case front, and this is not going to surprise you. Well, it didn't surprise him. He just said that the 2 major use cases, coding and customer service, right? Those are the ones, the only 2 that really focus that people are, that are using right now. Now, you could talk about searches, AI searches, but that's not like a big moneymaker right now. OpenAI, what did they say recently? They had a few 100 million, or no, 400 or 500 million like monthly actives or something like that.
Yeah.
So, but very few of them are paying for it, and there's no ad revenue attached to it right now. So it's not like a business that you can assign as something like a revenue generator. So what do you think of that? Like, when are we going to see other use cases? Now, obviously, Microsoft and the hyperscalers can monetize the spend.
And that's also Palantir and service. Now, I mean, the one thing I'd say the difference, and to Gene's point, is that hyperscalers, the reason like a Microsoft is partnering with the Palantir, and Oracle's partnering with the Palantir. The reason McDermott and ServiceNow, like they've had such success, because what's happening is the real enterprise use cases, like I'm saying in terms like insurance company, like a retail, a transportation, a logistics, or I'm just giving you some examples of ones that I know. They're not going to Microsoft. They're going to Palantir, ServiceNow. I could even argue like IBM, because of where they play, is actually starting to get.
But couldn't you make the case that not a lot of them are going to Palantir? They're going to have $4 billion in revenue. You know what I mean? Like, think about that. Like, it's just like, what sort of contracts are they getting from the enterprise? Half their sales are 45% or so of the government. You know what I mean? So like, I don't know. It just seems like a name that it seems buzzy. It's got a $275 billion market cap. It's got trades at 60, 70 times sales. You know what I mean?
I would like to take, because it's funny. Like I've talked, like, I really respect like your opinion. I think you have, because you're not just, and there's actually like, sometimes I'd say like when I hear people like online where they're like, oh, Nathan, the bet, I disagree with that, because sometimes people are just bearish just to be bearish. Like you being, you have a very high aptitude in terms of like tech knowledge. You understand the ecosystem well. So when you're bearish, it's not just on to be bearish. And to that point, like when it comes to Palantir, I think like if you went to a boot camp, just went into a boot camp in terms of like a Palantir boot camp, be like, no, I have no view.
By the way, they're like 20 yards from us right now.
No, exactly.
On the other side of the wall. So maybe they'll let me into a boot camp.
And I actually think if you saw the way that they're able to break down data, their algorithm, in terms of just actual use cases, customers, that I do think you'd have a different view from a technology perspective. Like there's a lot of companies like buzzy, but this is different. I actually think this is one where like they truly, when I'm looking at the next few years, and you said to me, who's a company that could be in that conversation? I know like they top 10 valuable now. I do think Palantir, from a technology perspective, is one of those. Because look, Dan, I can tell you, if I'm tracking 75 to 80 large AI enterprise deals, Palantir is in the vast majority, including if they're going to get it or they're definitely
What
involved.
size deals generally? Like, if you think about that,
3 to 5 million, and then a lot of them are probably 8 figures. Like in terms of potential, if you think about over the course of 2-3 years. So if I felt like I was doing checks, and I'm like, where's Palantir? Then I'd agree with you. It's like, okay, it's buzzy, but it is the opposite. Like in other words, like I see them coming up more in terms of strategically where they're coming up. Now, I could argue on the other side, like, are there competitive threats when it comes to like, what about Snowflake's business model? Like, what about like Mongo? Like when you think about like a lot of other players, like I actually think Palantir has kind of been, it's not just because of CARP, it's like a new kid in the block, but on the enterprise side.
by the way, he's been around for 20 years. I mean,
But
he's been
around 20 years, but remember, much more government focused, Western government, not as much enterprise. Like in terms of just going into a typical bank.
So they have 500, I went to Perplexity. I love just doing this. They have 554 enterprise customers right now, okay? That's a 42% increase from the prior year and 11% sequential increase from the previous quarter. So if you're telling me 3 to 5, you're saying there's 10 to 15 million, like these are the size of the contracts. I mean,
and some of them could be, when you think about like a Palantir, like when you think about some of these deals that could be 40, 50, 60 million, especially even on some of the government AI deals.
But that's over years. That's
no,
not like
of course,
1 year.
Of course, 100%.
But I'm saying it's got $3.9 billion in expected sales this year. Like, give me another 100, you know what I mean, of these clients. If it was up 11% sequentially, that's 55, right? Or something like that. It was up 42% year over year.
And $1 billion, like when you think about U.S. commercial, like the trajectory now, like it's like $1 billion.
I just don't know how you get there. I just don't know how this company ever grows into this valuation. Throw $2 billion more on it next year, and you know what I mean? Like, so now...
But to your point, that's my view is like, it's not just going to stay at this trajectory. In other words, when I look out in the next 12 to 18 months, I'm not going to compare it to like Salesforce in terms of how they grew into valuation, but I believe they're going to have significant step ups in terms of what we see in U.S. commercial.
Listen, Dan, in the history of the stock market, there's never been a company that was profitable, right? That had a revenue base like this that traded at 70 times sales. That's never happened. I don't even have that data. I'm telling you that's never happened.
No, and you're saying that without a bow tie, like without being like a marketer story.
Yeah, I'm just saying like it's absolutely without a bow tie. I like that. Yeah. No, I see what you did there. You know what I'm saying? So like to me, I think this is the biggest accident waiting to happen in the entire stock market.
But okay, I understand what you're saying in terms of valuation. Of obviously, like when stocks get hit, this is one where it's like, you sneeze and it goes from 120. And we saw that, especially like last time we were together. I actually think for the market, the reason it's so important to look what Palantir is doing, I think it's the best example of use cases in terms of AI. And look, like I'll be like, next few weeks, I'm in a bunch of Palantir customer events. To me, it's really I'm trying to basically get my arms around like how big could this be?
Well, you know what's interesting? So are a lot of your peers, a lot of your fellow analysts to go to those events too, or no?
I mean, obviously like some go to a bunch of events, but look, I mean, Palantir is also a name where it's like, you can't it's not spoon fed to you. I think actually one of the issues with Palantir has been, they're not someone that like, they have like a big analyst day.
Yeah.
And you go.
Is that coming up or no?
No, okay. but I'm saying you go there with the Peter Millar vest, in New York, get the chicken lunch, and then all of a sudden they spoon feed you some 3-5 year growth rate.
So you don't find that particularly useful?
Look, my career has been built. I'll go to some analyst day user conference, and a lot of analysts are sitting there, with the Peter Millars, I'm usually talking to customers.
Yeah, you want to hear from the buyers.
So that's I'm not saying it's right or wrong. Just for me, that's what.
So you and I have talked about this a lot. To somebody on the buy side, to your actual customers, they don't really care what your rating is. Back in the day, they would like kind of pressure you. Oh, why do you still have a buy in this stock? Blah 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 blah. That sort of thing. And it used to be that upgrades, downgrades could have moved stocks too, right? I think people have longer term time horizons now, especially your customers, right? So there's 28 analysts who cover the stock. Okay, I'm just looking at this. And there are 7 that have a buy, 16 have a hold, 5 have a sell. You are one of those 7. And I will tell you, I don't know the names of any of the other shops that have a buy on it.
Well, Bank of America,
do they?
The analyst at Bank of America has been like one of the most well-regarded bulls on it, like Mariana.
Okay, well then I'm missing that, and they have a buy on it because
they should have a buy.
Most of the other bulge bracket
very negative.
So negative. Yeah, and do you like that? I mean, so that's where I'm getting. You're out there. I'm just telling you. I can't find the Bank of America analyst on this list, but if they're not a buy, then you're the only guy that I know who has a really great following and everything, who's got a buy rating on this.
Look, it's not like I like to be. It's like one of those I like to be in the situations,
not for the sake of it, I guess.
But not for the sake of it. But it's and me and you have talked Tesla for years. I do enjoy names where everyone's super negative.
Yeah.
You feel like sometimes you found something that maybe could take time to play out, like a Palantir, and institutionally, I think this is a good example of one where the smartest person in the room, like the institutional investor, it's like I'm smarter than retail. This is one where it's kind of gotten burned. It's been the opposite, right? Because the smartest institutional investor is I'm not going to look at Palantir. They're the whole negative view. And then when the stock goes from bar mitzvah age to 100 and it's part of the S&P 500, as an institutional, that's where you're trying to figure out times when you Roman on the resume. So the thing is I love that. It's been enjoyable on this one because it's like I've told you, except for Tesla, I've never gotten more negative institutional.
This is it.
Oh, I mean, on this one, and the hate level.
Yeah.
See,
Karp isn't the sort of guy. He's not a divisive figure the way Elon is. Do you know what I'm saying? And he tells a story that actually you can believe. I read a bit of his book that came out, I want to say a few months ago. Yeah. And, he's clearly, somebody who's been out in front of this space. Some of his co-founders are some of the most brilliant people in technology. JT, They've stuck it out here. You know what I mean? They went public after being around for 20 years. You think about that.
In a direct listing. Yeah. And the stock went I think 31 cents or something.
Yeah, it got killed. But then it was $20 a year ago. Now it's $120. You know what I mean? And to me, I don't care about the price. What I care about is, a lot of folks who watch CNBC or, online or this and whatever, they're hearing this stock, right? And I've never seen anything like this where, I don't know the fundamentals the way you do. I don't talk.
But here's the one thing. What I would what I would like for you is that if you went to a boot camp, and you came out and you had the same view, and that's what I love about you. It's great, but this is one. And how about this? I'm gonna work to get you into boot camp. No, because
I would love it.
I want you to see that angle, to actually understand the technology, understand what they're doing, sit with the programmers. And then to come out and be look, you could still think stock's super expensive, but I just want you to understand what makes them so special.
Well, it's fine. So there's a book. It came out earlier this year. It was in February. The Technological Republic: Hard Power, Soft Belief, and the Future of the West. So this was really and whoever his co-author was, Nicholas Zeminska. And does he work at the company? I can't remember. But thought leader in the space or something like that. And they lay out a vision for the way AI is going to be used in a world right now.
And Karp is very negative on he's not bullish on the concept of LLMs, right? He's much more about data centric.
Yeah, so data, and I get it, and I got the point of this book after like 50 pages. I didn't need to read any more of it, and it was written, I think, 2 years ago, by the way, I think in 2023, and I wanted to go in there and have this like change my mind about the stock. You know what I mean? But I can divorce the technology and where it's going from the stock, and that's to me, I got no problem with CARP or the company or their mission. Like again, I just said they're in our office. Yesterday I was in the elevator coming up, and there was these two women who were not engineers. I already talked about it on this pod earlier in the week. You could just tell engineers versus not engineers. And one of them had the market had just opened, and one of them had their iPhone up with the stock on it.
Yep.
Not a good sign. I'm just saying, that's not a good sign when all the people who are working there now are obsessed with the stock price.
But actually, I'd say to the opposite. I actually find Palantirians, something for someone that's like spent a lot of time in that ecosystem. I actually, from my experience, it's the opposite. I actually find them less focused on things like stock, as opposed to so many other companies I've been with. It's an obsession. So I agree, but I do agree.
25 years ago, it was an obsession for all the tech workers, that sort of thing, right?
But I do agree with you that I always find a barometer my whole career. If I'm with a management team and traveling, we're visiting clients somewhere, and for like 2 days, and all they're doing is focus on the stock, the barometer as a bear, negative, I agree 100% with that general barometer.
Well, and again, that was purely anecdotal. But again, I'll can I have the last word on this one?
Yeah, of course.
I will go to a boot camp with you if you could sort it out.
And I would enjoy going to a boot camp
and hear what
with
I
you.
have to say on the way. I don't have those technical chops, by the way. You know what I mean?
But you do have a high aptitude in terms of technology.
But I know nothing about coding engineering or anything like that, so I don't pretend to. I hope I know enough about stocks, but again, it's 70 times sales, growing 20% a year. I just don't know how they ever grow into that valuation. So that's my 2 cents. All right, Microsoft, you were not surprised by the gap. Expectations were really low. Sentiment was really bad. You get that big gap. So on the way out of Microsoft, where are you right now? You're still like buy.
Because it's my view we're now in the inflection moment.
Good. All right. And you and I'll check back in a few months, and we'll do it again before earnings, hopefully. Let's talk about, we'll do Google last because we want to talk about some of the other stuff. Amazon, AWS, what they're doing with AI, the investment in Anthropic. Did they end up buying Anthropic? They're kind of left in the cold other than AWS, that sort of thing. How did you think about that quarter?
I mean, I think the AWS number, to me, it's all like Jassy's an AWS guy. I actually think after years of really being behind the 8 ball, like they're accelerating. To me, so much of the story, you could say it's the advertising, incremental, and obviously everything on e-commerce and margins. I think it's AWS. To me, that from a sum of the parts,
where did growth bottom out? I want to say a year ago, like 12, 13% or something like that, and it's reaccelerated to what?
Look, and I believe like steady state, like you can get back to like high teen type growth. And look, I think as this all plays out, like 20% plus is something that I think is on the table. Like as it all plays, look, they're the leader when it comes to hyperscale. Microsoft's the leader when it comes to enterprise, but Amazon first mover advantage, the biggest opportunity for them, obviously Anthropic's a key part of it. It's monetization of their install base.
Do you think Amazon's relationship with Anthropic is what sort of standing is on relative to Microsoft and OpenAI? Do you know what I'm saying?
That Microsoft OpenAI is much more frostier. Amazon Anthropic is, that is kind of like a blood brothers. Like,
do you think though Amazon wants, like, if they could have had Claude, you know what I mean, like a large language model that consumers are using, like, you can't kind of squint and see, I can see how that would work within their ecosystem and everything like that. But does that not a focus to them? Are they happy just to have the cloud and let small businesses adopt the technology and benefit that way? I
think they went down that path. I could have, in other words, but I think they realized and remember Jassy being an AWS guy, I think they realized hey, are we going to go left lane, right?
But they are building a model, right?
They're building a model in terms of the long game, but that would be like Apple's building a chip that eventually, and they're not going to need NVIDIA when I'm a senior citizen living in Scottsdale. I mean, the point is like you got to look at things like long-term versus. So, but I think they recognize in terms of their business model, this was the smart decision.
Right. All right, let's talk. And again, you're still a buyer of
Still
Amazon.
a buyer. And it's my view because, and you own it for AWS. You're owning it for the cloud. Because I continue, it's a safety blanket trade in tech.
Yeah. And I feel like that is one that was on a relative basis, maybe under-owned to Meta. And Microsoft was pretty under-owned. But, all right, let's talk.
And also Amazon too, because of the e-commerce piece with tariffs.
100%. Meta, give me your 411.
I mean, 411 is just like, to me, it's all about monetization in terms of digital advertising. We're continuous, like all of our data has been positive from a digital advertising. The quarter I thought was actually very strong when it came to digital ad. But when it comes
there was some stuff under the hood.
No, there's some stuff under the hood. But to me, it's all about, as an AI play in digital advertising, 3.5 billion users that you're basically, this is your play.
Yeah.
I mean, that's, to really sum it up, like that's my view. I mean, obviously you have like regulatory, FTC, there's so many different things. I just view it as like, that stock has come down significant from its highs. I think investors feel like a lot of it was like played out. But to me, if you believe in AI, like we are such believers, this is one of the, like, from a digital advertising consumer play, it's going to be one of the best ones out there.
Okay, so you're still a buyer. The stock went from, I think at its highs in February, it was like $745. It got as low as maybe $490 or something. Here we are right now at $590. So it's still down considerably.
And we view it as kind of like up to $650 is aggressively where you own it.
Okay. And that's where it broke out actually in January and had that move where it went up like 20 days in a row or something like that, which really set it up to kind of retrace a lot of that one way or another. I'm just going to go off script here for a second. So Pinterest reported Wednesday night. So by the way, just to timestamp this is Friday into the close. We're talking right now, it's 3:50 in the afternoon. Some of the stuff that Bill Reddy was actually on Fast Money last night with Julia Borson, right after that. And, he seems to be telling it. It's funny. I love CEOs like him. You know what I mean? Like he's not. You know what I mean? He's not out there being quoted all the time and all this sort of stuff. He's kind of right down the middle a little bit.
Oh yeah, definitely.
So how did you feel about what they had to say? Because a lot of their story using AI is not too different than the way Meta talks about it in a way. But they're under monetizing, and that's the opportunity.
I think they're actually an underappreciated AI. Like if there's someone that feels like Meta's played out and there's regulatory risk, Pinterest is actually a great way to play it. And actually, in terms of leaders and people that understand the market, I think he's basically like in that elite category. And I think they're probably 6 to 9 months away from an inflection. So it's one like, okay, is there an inflection today? No. But do I believe in the next 6 to 9 months there's an inflection there? Yeah. And you look at their core franchise, and they continue to sort of be that core.
Right, so let me ask you this. Okay, so earnings growth this year expected to be 30-some percent, 19% next year, 15% sales growth
it's probably
this year
to
and
20%.
Next. Okay, so let me ask you this. 80% gross margins. How is this stock trading at 16.5 times this year and 14 times next?
Yeah,
how is it not just an absolute like load up the truck if you think that they can actually better monetize on the way, you know what I mean? Like, because a lot of the same ways that Meta is doing it, there's no reason why they shouldn't be able to do it.
I think it's one, like, first of all, institutionally speaking, I think there's like a negative bias. Like there's a view where it's always going to be some excuse. There's always going to be something, some sort of fly in the ointment in a quarter. I think this is one where this across tech probably is one of the ones that stands out the most in terms of like so much more can go right than wrong.
So let me ask you this. So at that valuation, I'm looking at their, like, they have $2.6 billion in cash. They have no debt, and it's got nearly
And they probably do M&A too.
Yeah. Like, well, forget M&A. I don't know who the hell they'd buy that would like move the needle if you think about it. But why isn't this company on the block?
We've always said that they're.
Who would buy it?
I mean, look, a big strategic.
Who could buy it? Actually, what it comes down to, right? Is it more who?
Yeah,
could?
but also Khan no longer at the FTC. A lot of people, even though FTC is obviously.
I don't think anything's changed.
Yeah, but we gotta see as it all plays out. But I agree with you. Look, and there's a lot of play, and I think also big tech players will try to go down the path. So you could look. I think every big
But that's
tech
been
player,
a part of you. You think that they could be like a target?
They always are. When you look at high premium names that could get acquired because of where they're positioned in terms of big tech, Pinterest has always been.
All right, so here I'm just gonna keep like throwing stuff at you. So Snap. So if Pinterest has a $17 billion enterprise value and Snap has a $14.5 billion enterprise value, and they have a ton of debt. Okay, they do have.
And
cash.
we're negative on Snap.
Yeah, and that's a company where their gross margins are what, like a 45-50% or something like that, 54%, excuse me. And you know, Meta has 80-some% or something like that.
I mean, that's one, like we've always said, it's like, that's a flawed business model. And I get the volatility, like a lot of traders like it into and out of quarters. I view it as kind of like, if it moves higher, it's probably, you know, you view it negatively. But that's one, like, you know,
Evan never sells. He's got super voting rights and all that sort of stuff.
I just never have viewed that name positively. And I've always felt you're always like a grenade away from just like a down 25% quarter.
Yeah.
You know what I mean? It's just.
Well, usually it either rises or declines 15%
but also,
every
but I
quarter.
almost think it's like, when I think about things, it's like you drink coffee in the morning, you watch sports in the weekend, and Snap's down 25% in a quarter. Like it's almost like those
I love that.
all go down
I love
together.
that. All right, so Meta, still a buyer. Pinterest you like, and I'm glad we threw that one in there.
And that was good that you brought up the interview, because I do agree he's an elite.
Yeah, right. And you know, that's a good example of a guy who came in after a founder, CEO, you know what I mean, and has done a nice job.
Yeah.
But the stock has not actually done a whole heck of a lot in that time period, though.
No, I agree, and it's been more of a laggard.
Yeah, I think to your point, it'll be very interesting to see how these remedies come out of some of these FTC and DOJ cases, and these cases have been around for a long time. If they have any
now,
teeth
they're
to them.
definitely
that's coming. It's coming in here. Let's do Apple, then Google. The quarter, China, pull forward. Like, what was your takeaway on that? Because that stock has done nothing. I think it was down a few percent, or 4 or 5%.
I mean, my take is it's China tariff driven. I mean, that's the one where
China's been bad long before the
but
tariff.
China was better than, if you think about it, like constant currency was basically flat. Last quarter was down 11%. So like relative to like whatever, call it less bad. Actually, it was pretty positive relative to expectations.
But it's the lack of visibility.
Was the lack of visibility. The India pivot has been impressive, to say the least. I mean, look, if you told me when we sat here April 11th that we'd be sitting here in May, and you're like, more than 50% would come from India, I'd be like, come on. That's not possible. So the point is,
believe that though? I mean, like, how were they able to kind of?
I mean, how basically behind the scenes, it's like, look, you got a 90-day reprieve, whether government, however, you know, behind it cooks 10% or maybe 30% politician, 70% CEO.
On both sides, by the way.
On both sides, both in China, and basically you ramp up in India. Likely, that's going to be one of the first big trade deals where with de-escalation, if you're betting on a horse, bet on India. You have Foxconn. We'll give you 90 days.
So let me ask you this though. Do you think China, as they see a company like Apple, who's basically created this entire ecosystem,
second biggest employer in China,
right? So if they start diverting, you know what I mean, offshore, away from China, doesn't that, like, I don't know if that China business ever comes back, because the government has the ability to put their thumb on the scale as it relates to consumer preferences and the like. So I'm just curious, does that present a big a big problem for Apple? And
of course, it's especially relative to like when you think Huawei and other, and that's why you talk about Cook, like politician on both sides, because he needs to make sure, like, okay, India, but I mean, our business, I mean, 20% of iPhone demand is in China. So it's like, it's no different than what like Jensen and NVIDIA are doing, where it's like, hey, we don't want to lose our China business to Huawei. So this is a very tenuous time for Apple because they're really at the beholden of tariffs. But my overall view is like, it's about the install base. It's about services. It's my view that like when you think where the future of AI, so much of that is going to ultimately come through the phone.
Through the phone, but not on the phone. Like, so think about on the edge. I mean, the whole point of Apple Intelligence is that they were going to embed this technology within the hardware, right? And right now,
look, Apple Intelligence, and it's obviously been like a huge disappointment.
Yeah.
Late to the game. WWDC and they have to.
They're ripping up the script. Once they pushed out indefinitely Apple Intelligence, you had to think iOS, whatever is 18 or 19 that's coming out in the fall, that they were going to preview in June, and that's a month away, by the way.
No, I know.
Do you go out? You go out there,
yeah,
right?
Yeah.
Okay, you got to give me a text while you're there. You know what I mean? You got to think that they literally had to rip the script up. What are they going to talk about that's going to be interesting?
Look, it's laying out the vision for App Store, for iOS, for the future of it, but also giving
App Store for AI-enabled apps.
Because the view is that when you think about how they're really going to monetize, they're a toll collector. In other words, like the apps that are going to be built on their App Store, and they get obviously a cut, and obviously that's part of the regulatory. So that's a big piece of how they're going to monetize. But when it comes to for developers, it was a huge disappointment. Everything they basically laid out, minimal amount of that's come through. So this is kind of like, I won't call it a do-over, but you can't mess this up twice.
All right, so real quick question though on the application layer for iOS, okay? If they don't have something built into the operating system, what are the developers going to create for the App Store?
They need that.
So my point is like at best this is a fall 2026 thing, and you won't see the service revenue until probably you're not going to actually see it until January of 2027. Like,
well, I'd say the best case is that it's something that you'd see by late fall 25, because they would
late this year,
fall 25 into early 26, something that would be attached to an iPhone 17.
You better hope so. All right, let's talk about this because this was a very un-Apple thing. Eddie Q,
the shot across the bow.
Okay, so he's under oath. He's speaking at this Google antitrust thing, and when I saw those headlines, I was recording something. I was doing one of our like live podcasts, and I see that coming across the tape, and it said Eddie Q. And to be honest with you, I didn't know that he was testifying. You know what I mean? I was like, this is like not Apple's MO, right?
Sure,
to be saying that sort of stuff. So just quickly.
And that's very, to your point, so uncharacteristic of Apple.
So Gene and I talked about, all right, so let's run through a little bit what Eddie Q said and why, and what happened here, because it's really important.
Look, it also goes back to like a huge piece of, like when you think about Apple and their partner is Google, it's search. And he basically is saying like, look, AI could basically, I wouldn't say eliminate search, but it would be a huge competitive threat to search where we see AI going. So obviously, when you actually take those remarks the way they are, it really was a huge shot across the bow at Google, Alphabet, in the midst of an antitrust with their biggest partner when it comes to Apple.
All right, so let's step back.
I wouldn't say throwing them under the bus.
Yeah.
But
all right, this is a really interesting one. Okay, so just to be clear, Apple gets paid from Google for exclusive search on Safari on the device $20 billion a year. Apple has a $400 billion revenue base. $100 billion of that is services, and 20% of that is the Google Play.
Yes.
Okay, so and it's really high margin. Okay, so what Eddie Q was saying is that we are seeing fewer search queries on our Safari device for Google. And they're saying that we are going to start talking to Anthropic, Perplexity. Now go back to WWDC in June when they launched Apple Intelligence. They basically only said OpenAI, okay? And then quietly, maybe they're saying it to people like you a week later or whatever, oh, we're open to looking at Gemini. So Gemini is Google's large language model.
I remember they almost were going to potentially have a deal with Google that never ended up happening.
Never happened.
So there's definitely, I wouldn't say bad blood, but it's not exactly.
But the fact that Apple receives $20 billion a year from Google, and they don't even mention Gemini because you think about it. I know why they didn't mention it, because of the antitrust case, right? So they're trying to play both sides of it. So they got to do everything in their power to keep that Google revenue. But by the same token, they have to make sure that there's not going to be some crazy remedies that pulls the rug under it. Is that right?
That is the best way to summarize the situation.
But they're in a tough spot.
They're in a tough spot would almost be like an undersell. I mean, they're almost in an impossible spot, as well as also like their key in terms, because remember, it's the whole like, would they testify in the trial? Right. So look, and then for Google, they need Apple because of the 2.4 billion iOS
base, right?
Exactly.
One thing, and this is not me taking a victory lap by any means, because nothing happened. I've been saying Arvind Srinivas, the CEO of Perplexity, came on our pod February of 2024.
He's great.
Fast Money at that time, and I had said prior to that, I said on our air, this is why somebody introduced him to me, because he heard what we were saying and that sort of thing. And I said Apple, because at that point, no one knew. This is February 2024. No one knew anything about Apple Intelligence or anything like that. We didn't even know what the hell they were doing. I was like, Apple should they were raising money at $2 billion. They should make a knockout bid for this company, $4 billion. That would have been enough.
Look, you're preaching to the choir. I mean, the thing is, like, the biggest frustrating part about Apple is that when it goes like, when they could have bought Netflix. I remember Perplexity.
They bought fucking Beats for $3.2 billion. You know what I'm saying? It was like the dumbest thing you've ever seen in your life.
And the reality is, like, where would Meta be when you think about
Instagram for $1 billion?
Exactly.
Yeah. And they did that a week before the IPO.
And even like OpenAI, like, even though it's not an actual acquisition per se, Microsoft OpenAI, when you look at what they paid for that and what they're going to get, it's like a 30 bagger relative. So it's like, I think Apple, you were saying like innovator's dilemma and everything else. I think sometimes like the hubris, or maybe the, we can do it better than others, no M&A.
That's been the Apple way forever.
But it's in this situation, when it comes to AI, it's hurt them many times, because they could have bought Perplexity, and then the OpenAI partnership, and basically 90% of what they talked about, they basically had to scrub.
There is a sense of irony with that they've always wanted to build rather than buy, and how Steve Jobs got back to the company is that they bought Next, his company, and part of that was bringing the new blood, which was the old blood, back into the company. And when I looked at Eddie Q the other day, and I don't mean to, I'm not an ageist or anything like that, because I'm getting old myself, but he's getting old. All those guys that, 20 years ago used to come out and all those big presentations, I mean.
Think about Wozniak.
You forget in 2007, that's when Steve Jobs went out on that stage and introduced the iPhone, and Q used to go in that Federici, and those guys looked like this young, vibrant. Now they look like old men. And so the idea of doing some of these acquisitions, bringing some new blood in there, you know what I mean? And Gina and I talked about this early in the week. I mean, at some point, they're going to have to do this, because these are evolutionary, not revolutionary
and actually,
products
Gene
anymore.
and I have talked about it with each other a lot, in terms of this dynamic. Because obviously, he knows Apple so like unbelievable. When you look at like what their biggest strategic mistake is, look, when it comes to AI, they've really
you could say Vision Pro was a disaster. Like, they haven't had anything since the AirPods.
Yep.
They have not had a new hit. Now, you could say that they sell 200 million iPhones. Well, how much is it a year?
Yeah, 225.
225, but they're not growing. You know what I'm saying?
No, it's been.
And let me tell you something. If these tariffs stick, even if they're 50%, their market share is going to take a huge hit. And I'll tell you why. Because if all of these new apps that you can get on Android, you get DeepSeek, you can get all this other stuff, why are you going to spend $1,000 on an iPhone when you could have, a cheaper Samsung or something? Like, they run the risk of losing a lot of market share.
Look, tariffs, we've always said, like, the two caught in the eye of the storm. Apple, and then but it's really Nvidia too because
yeah. All right, let's talk really quickly about Google. So one of the things that was interesting when those headlines hit about Eddie Q is that Google gapped. I mean, it closed down 8% that day, and I think a lot of
investors, they put that statement out like that night or in the morning,
refuting it. And so and Ben Ritzis of Milius was on Fast Money that night. He's existential risk, blah, blah, he was going crazy, and I said my response to him, and he was very dismissive about it, and which is all the power to him. He's probably forgotten more about Apple than I'll ever know. But I said it's interesting to me that Apple also sold off. Okay, it didn't sell off 8%, but it sold off 2% or something like that. And I said, couldn't you think that they're facing their own innovator's dilemma here too? So talk to me about Apple really quickly. We just talked about Apple. Are you a buyer, seller?
You're a buyer because of the install base and because of the opportunity.
Because they've missed out on so much, they can only improve.
But to your point, there's a window.
Yeah.
And this is the window. It's like you can't keep.
Do you worry about valuation 27 times?
I don't worry as much about valuation just because I view it as more sum of the parts services and then the ability on AI. But look, you could trip over your shoelaces once. Can't do it twice. And you can't do it 3 times.
I also think at $198, what's interesting to me is that the stock was trading at $193 June 10th, the day of WWDC. And I just think that's interesting because it went up 10% in a straight line after that. All right. Let's go to Google now. Existential threat.
I disagree. Longer term, it's a threat.
Yeah.
And Google knows that. Yeah. I disagree in terms of the near term that it's this sort of this moment that sort of is the dark sort of cloud that ends. I mean, my view is it will take time. If you look at search, you look at digital advertising, you look even demographically, but it shows Google. You can't just assume that this is not going to be, it's going to be a threat, and they're going to have to ultimately change their business model accordingly. But do I believe the stock relative to Google Cloud, relative to digital ads, relative to everything should be where it is today? And it was the risk reward here, I view it as much more upside than downside relative to.
All right, let me throw this at you. So if Monday morning, okay, a headline hits, go download your OpenAI browser, okay? And then a week later, you see that it's been downloaded 250 million times globally, okay? And, OpenAI, ChatGPT is embedded in that.
Yep.
They've created a UI, so it's a browser and it's also a search engine, an answer engine, that sort of thing. Google's fucked because they have 65% of global browser market share with Chrome. The only time I am doing Google searches is when I have Chrome up because it's easier just to put something in there. And then Perplexity is going to have a browser and they're going to have ad-supported models. That to me could make this thing happen much sooner than...
That would be if there was a black swan scenario, negative. Outside of regulatory and DOJ and everything, that would be it.
Okay. So Google, though, you're a buyer here.
Buyer based on some of the parts, $200.
Sounds like buyer beware.
It's more of it's a buyer, but that's not one where if I'm walking in my top 5 names to own, Google's not one.
It's funny. I had Dan Benton on. Dan. Legendary tech investor, ran Andorra. He was on with me yesterday. Dropped this morning, so check it out in the feed.
That's a great interview.
Yeah, he's great. He's been a friend for a while. And what I like about conversations with a guy like him is he's not running a hedge fund right now. He runs his family office and everything like that, and he's still got a lot of fabulous insights. We talked about a bunch of this. Okay, so Google. You're here, some of the parts, valuation, it's not going to fall apart.
But it's not a table pounder.
All right, let's finish with Tesla.
Your favorite.
I promise you. Well, I mean, listen,
Look, it was when we were here that day, the thing that stood out the most was Musk, you have to.
That was your message. That was your message. So if someone was listening to our podcast and they were saying that Dan Ives was saying to puke your Tesla and this or whatever, it's not what you're saying. You were not actually coming. I was coming at you hard about the fundamentals, okay?
No,
but you were finding, kind of silver linings around it. You said the biggest issue was that he has to leave the government. And you were pounding your table on it. All right, so now that that's happened, now that we know how bad Q1 deliveries were, their guidance sucked. We've seen some data about April, not good. How are you feeling about the fundamentals? And the idea was that Elon was only going to spend a day a week.
But that's done. I mean,
it doesn't matter.
It's done, regardless of the Wall Street Journal. I mean, the point is his days the Trump White House are over, in my opinion. Look, there's heavy lifting ahead. I mean, the reality is like you got to turn things around in China in terms of everything we've seen with BYD. You got to turn Europe, and we've said it's probably about 15-20% permanent demand destruction in Europe because of...
You've gone up from that. I mean, because I want to say a few months ago, you were like 5% or something. Is that fair? Is that right?
100%.
Am I quoting you correctly?
No, that's and we're saying like the demand destruction in Europe more than any region is real because of like from Germany to a lot of the politics and everything else. Look, my view of Tesla is you have to show autonomous, because it speaks to like Austin autonomous.
What is that, June or late June?
In June.
Do you think there's a chance they push it out?
I don't believe. No,
Last year they pushed it out.
I know, but look, a lot of it's going to be ring fence and stuff, but you need to show that this is going to ultimately kick off the autonomous vision. Because, look, 90% of the value to me, you've talked about, is the autonomous and robotics piece of Tesla. That's going to be a key part of the value.
Like, I could see a world where maybe they nail that technology, okay? But it's going to be licensed out to,
like OEM'd out?
Yeah, because no one wants to own these fleets. Like, that's something that no one talks about. Elon knows that. That's why he's like putting out this preposterous idea that you're a consumer and you could put your Model 3 or your Model Y into a fleet. I was in Atlanta last week, and I was driving from the airport into town, and I know that Waymo has not even deployed yet in Atlanta, but they're getting ready because I drove by, a depot. Yeah. And there's a bunch of the Waymos out there, and there was charging, there was cleaners, there was a big, you need to have like a workshop in there or whatever. How are you going to get your car to a depot that's going to get charged and it's going to get cleaned and it's going to get all this? It's just not going to happen. Like, I'm taking the over on all of it.
No, I know your view. And look, but Waymo's $240,000 cars in 4 cities. I mean, if you look at the scale and scope of Tesla, the view is like, if you have the scale where you'll have a few 100,000 cyber cabs over the next year, this scale from an optimist perspective, that you could ultimately have something that could be multiples of what you produce in terms of actual vehicles today. You need a next gen vehicle to come out.
Right. And they have not, by the way, they have not done a good job creating next gen vehicles.
No.
Think about that. Like he said he was not going to do the $25,000 car because they wanted to do robotaxi. The robotaxi they showed us had 2 seats in it. 2 seats in it. Who the hell is going to order a 2-seat robotaxi, right? And so I think they have a real problem. If you're going to make 300,000 of these cyber cabs, where are they going to make them? So that means they're not going to make 3s and Ys? Like, think about that. So they're already going to do 1.6 million cars probably at best this year.
Or 1.65, 1.7.
Okay, fine.
Yeah.
But, they did 2 million 2 years ago.
No,
they did 1.8 last year. They're going to do 1.65 this year. Not good.
Look, this was a Cinderella ride for 3 to 4 years. Now it's at a point.
By the way, 3 to 4 years prior to 21, because it's been whatever you want to call it, a disaster since the highs in 21. I mean, think about that.
But the point is like this is kind of, I wouldn't say like it's the biggest inflection point, but like this is a very important 6 to 12 months for Tesla and Musk to show that like you could turn around the growth in terms of the core business, autonomous launches, and gives you the actual use cases and something that you can now believe there's something across the United States could actually be deployed. And the margin structure stabilizes. I think that's the scenario.
The margins, the auto margins were below GM and
Ford.
Super. Below GM and Ford.
Even though there were some inventory issues, but look, this quarter, as we said, it was a disaster. Now look, 2Q, it's not going to be too much better, but you basically have a view, and it's our view, like second half of this year, you hit the ultimate timeline, and then you start to be on the road to recovery, that's sort of the bullish scenario as it plays out.
I think the recovery in EVs hits a wall with the development of robotaxi.
And what's your view of I forgot, what's your view of like Rivian?
I mean, whatever. It's going. You know what my view on Rivian? It's Tesla in 2010. Do you understand what I'm saying? They do have a really nice car. Anecdotally, you talk to people from California who don't like Elon, they're buying Rivians, okay? And they'll stick around, you know what I mean? Like I would like to see Amazon.
And the VW.
They have that and everything like that. But again, it's never going to be, they're making 50,000 cars.
No,
right?
It's been disappointing on the supply chain.
Yeah. So, I mean, on that front, I don't know. Like, I think your view, being optimistic, makes perfect sense here. I wouldn't be short the stock here. You know what I mean? Like, and I think it's going to be a make or break for them. I mean, if
look, but like, it's also relative to like Musk has done the right thing, but now it's like leaders lead.
Right.
Like, you know, it's like.
Well, by the way, on the call in January, or the Q4 call, he said something really interesting because he was getting kind of pounded a little bit about, you know, how he spends his time and everything like that. And he said, my management style is going to where the problems are, which is to a T what he's doing right now, leaving Doge.
Look, in that conference call, that was the most, like, I wouldn't say like contrite, but that was one where
he
like.
said, don't look here at the EVs, look at Optimus and look at Robotaxi.
But especially, look, and we've said it's like Doge, Trump. I mean, I do believe this took on a life of its own that he never. I think he significantly underestimated.
Well, I think that his behavior actually speaks the opposite way when he's going out there with the chainsaw at CPAC and all that sort of stuff.
I think it just it.
Listen. I think those impulses that he has are really, you know, they're not great for his personal life and they're not great for his business.
Well, especially the brand.
Yeah. One last thing on this. If you saw an announcement on a Monday morning that Tesla is going to buy XAI, okay, for let's call it $150 billion.
You mean like the combo of the whole, and put the holding structure.
You're throwing Twitter and XAI together and whatever they're calling it, X. And so it's got nearly $1 trillion market cap right now. And it'd be like a related party bullshit transaction. You know what I mean? That sort of thing. Would that make you more bullish about Tesla?
More positive, because then my view would be, like, if I had to write that note right now, it would basically be like, it becomes more of an AI play. Yeah. And from a technology perspective, it now gives it the ability to integrate that technology becomes even that much more easy.
Well, that makes sense, by the way, because if OpenAI is raising at $300 billion and you can kind of say that these guys are on their way to that, then that helps justify that multiple.
And then to your point, like, you know, like as you raised all the points, like delivery is 1.6. I do believe like that narrative would change because you'd actually start to view it much more as a disruptive.
What would you discount that? What do you think the probability?
The probability of that is, I'd say the probability of that happening is not 5%. Yeah. It's more like 35%. Yeah. The chance that happens in the next 6 to 9 months.
All right. So my take would be, I like your probabilities there. If the auto business doesn't start to turn, then and let's just say the stock is right here. Let's just say, because a lot of the true believers, they listen to Cathie Wood and they listen to all these folks and they say there's going to be a $5 trillion market cap company, then they should do it all day long.
That's not that I actually like. That is not a ridiculous view. Like I agree with some of that timing. It's almost like try it. If you could see that happen.
Well, let's see. We're going to check back. I really appreciate you being here.
No, this is
twice in a month, Dan.
No, I love all the stuff you do. I think the pods have been on fire.
Yeah, I appreciate it.
And it's great, and it's just great for the listeners to watch, whether they agree or disagree, because it gets some of the things out. You know, in terms of
listen, what we're trying to do, we came into this year and we said we wanted to have more diversity of conversations with more people. And so we really appreciate you being here twice and hopefully we'll do it again in a month.
It's my pleasure.
I love these conversations. You know, I could do this all day long. No, I know you do it all day long.
No, but I really enjoy talking with you because they're very insightful and like deep dive discussions that I think really like flesh out a lot of the stuff. I appreciate
it. But by the way, and Bill knows this, and Amanda, half the people hate me. So you know what I mean? It's my mic, so I just do it.
But also on that point, Like apathy is the worst.
Yeah.
Also, when people hate, a lot of times it's also like they're listening to you, because whether they like it or not, you raise points where I think they're very, very valid, and I think you can't just dismiss them.
Yeah. Well, by the way, we're doing pleasantries right now. I appreciate when you were on in April 11th, you were about as raw as I've,
That was,
you.
yeah.
No, but I don't say that in a derogatory way.
No, I know.
You kind of laid it all out there, and you had been doing TV and you'd been doing calls with clients. You said you got off 7 hours ago with a call with 200 clients in Asia. You know what I mean? Like that sort of thing. And I think that sort of emotion and those sorts of convictions, or challenging your convictions, is really important. I think we're saying the same thing right now.
Totally.
So.
And I'm glad to do it with you, and I'm glad like that date happened, today happened, and it's part. Look, we're all on this journey together.
100%. All right, Dan Ives, we'll do it again really soon. I appreciate you being here.
Thank you.
Thank you.